Hey everyone, welcome back to the channel. If you're watching this, you're probably wondering what's happening in the markets right now. It's earnings season, and things are getting spicy. We've got Netflix missing the mark, Tesla about to drop their numbers, and geopolitical drama that's shaking up oil and gold prices. Let's dive in. So here's where we're at today. US stocks are slipping slightly lower across the board. The Dow is down about 43 points. The S&P 500 and NASDAQ are both dipping around 0.1%. Not a massive drop, but definitely worth paying attention to. And the big question everyone's asking is, what's driving this? Well, it all comes down to earnings season. And one company in particular that disappointed investors today, Netflix. The streaming giant we all know and love, or love to hate, depending on how many password crackdowns you've been through. So Netflix just reported their third quarter earnings, and here's the deal. Their operating margin came in at 28%. Now, Wall Street was expecting more, and when you miss expectations, the stock takes a hit. The culprit? A tax dispute with Brazil. Yeah, international tax drama strikes again. But, and this is important, it's not all bad news for Netflix. Their revenue and profit actually grew this quarter. They had their best ever quarter for advertising sales, membership jumped, and they raised prices. So while the margin disappointed, the fundamentals still look pretty solid. Now let's talk about the earnings report everyone's really waiting for, Tesla. Elon's electric car empire is set to report after the market closes today. And this is huge because Tesla kicks off earnings from the Magnificent Seven tech megacaps. These are the companies that basically carry the entire market on their backs. Here's what's interesting. Tesla posted record third quarter deliveries earlier this month. Amazing, right? But here's the catch. They did it with heavy discounts and marketing campaigns because buyers were rushing to take advantage of a $7,500 tax credit for EVs. That tax credit, it's expired now. So the big question is, can Tesla maintain momentum without those incentives? We're about to find out. Let's rapid fire through some other earnings highlights. Mattel. The toy company missed estimates with weaker North American sales. Not great if you're a Barbie investor right now. AT&T actually crushed it. They added more wireless subscribers than expected, thanks to bundled plans and iPhone promotions. GE Vernova missed earnings but had strong revenue. Mixed bag there. Hilton beat expectations but cut their 2025 forecast because US travel demand is looking soft. Apple stock fell after reports they're slashing production of the iPhone Air and shifting focus to other iPhone 17 models. So it's really a tale of winners and losers this earnings season, but overall, more than 3/4 of S&P 500 companies that have reported are beating expectations. That's actually pretty solid. All right, let's zoom out from corporate earnings and talk about the geopolitical chess game happening right now. First up, the highly anticipated meeting between President Trump and Chinese President Xi Jinping in South Korea later this month? Yeah, that's now in doubt. Trade tensions between the US POS and China are a massive deal for markets, so any uncertainty here makes investors nervous. And if that wasn't enough, a potential summit between Trump and Putin has been put on hold. Russian officials reportedly said they have no intention of ending the war in Ukraine anytime soon. This isn't just political drama, folks. These tensions have real economic consequences, which brings us to gold and oil are moving in opposite directions today, and it's fascinating. Gold prices dropped 0.6% to around $4,085 per ounce. Earlier in the day, it slid all the way down to $4,000. Gold's been on a wild ride lately, and this sell-off continues that trend. Oil, on the other hand, soaring. Brent crude up 2.2%, WTI crude up 2.4%. Why? Two big reasons. First, that canceled US-Russia summit we just talked about. Second, the US announced plans to refill strategic petroleum reserves, buying 1 million barrels of crude. Plus, industry data showed US inventories are dropping. When supply concerns rise and demand signals look good, oil prices go up. Simple as that. So where do we go from here? All eyes are on Friday's Consumer Price Index report. That's the inflation data that could determine whether the Federal Reserve cuts interest rates at their October meeting. But here's a wrinkle. The government shutdown, now in its 4th week, is messing with data releases. So we might not get the clearest picture, which adds even more uncertainty to an already uncertain market. All right, everyone, that's your market wrap for today. Earnings season is in full swing, Tesla is about to report, and geopolitical tensions are keeping things interesting. What do you think? Are you bullish or bearish on Tesla's earnings? Drop your predictions in the comments below. If you found this helpful, smash that like button, subscribe if you haven't already, and hit the notification bell so you don't miss our next market update. Until next time, trade smart, stay informed, and I'll see you in the next one.